Let me ask you something. The number one trader on Wall Street, probably the world, with over $100 million in verified profit and loss. Do you really think he's sitting here trading ICT models, orb breakouts, reversal patterns, or any of the other bullshit that you see on YouTube? Seriously, think about it. What do you actually think he's doing? Here's the reality. He's not trading name strategies. He's not waiting for a pattern to tell him what to do. And he's definitely not guessing tops and bottoms all day. At that level, everything simplifies. It comes down to one thing: alignment with direction, once value is established and flow is confirmed. That's it. Now compare that to how most traders are taught. They're trained to look for reversals, breakouts, patterns, signals, indicators. Everything becomes, if this happens, click buy. If that happens, click sell. And sure, sometimes that works. But over time, that approach gets punished because high-level traders don't think like that. They're focused on three things: directional flow, value acceptance, and positioning pressure. Directional flow asks who is in control, which side is dominant, is price being accepted higher or lower. Value acceptance asks where is the market comfortable, where is price being accepted, has value shifted. And positioning pressure asks who is trapped, who's wrong, and who is about to get forced to exit. When those three things align, price doesn't reverse, it continues. This is where most traders get it wrong. Continuation is not a strategy, it's a result. The best traders in the world are not saying, I trade continuations. They are aligning with value, flow, and positioning. And when those are aligned, continuation becomes the highest probability outcome. Retail traders do the complete opposite. They try to pick the tops, they try to pick the bottoms, they fade strong moves, they trade reversals that have no real shift in structure, and then they flip bias emotionally, which leads to one core problem. They are constantly trading against the continuation. So here's the hard truth. If price is holding above value, respecting structure, and showing no real shift in control, then trading against that direction is low expectancy. You might win sometimes, you might catch a top or bottom here and there, but over time, you are stepping in front of the same move that professionals are riding. And that's exactly why TradeShield was built. Not to give you more signals, not to add more indicators, not to complicate your chart, but to do one thing: prevent you from trading against confirmed direction when the market is not offering a real shift. If the market is long, shorts get blocked. If the market is short, longs get blocked. If there's no clear direction, you don't trade. No guessing, no emotional overrides, no just this one trade, because most traders don't fail from the lack of knowledge. They fail because they overtrade, they revenge trade, they ignore structure, and they act on emotion. TradeShield removes that entire layer. So understand this: the edge is not ICT, orb, indicators, patterns. The edge is aligning with direction once value is established and flow is confirmed, and avoiding anything that goes against it without real evidence of change. Because if you ignore this, you might win occasionally, but long term, you'll continue to get punished by the same moves you're trying to fight. And once you understand that, everything changes. You stop chasing setups, you stop forcing trades, you stop fighting the market, and you start doing what professionals actually do. You position with the move, not against it. If you're not profitable yet, and you're not even covering the cost of being in this industry, you should not be risking money on counter trend trades. And you definitely don't need to be sitting there staring at charts all day, taking trade after trade after trade after trade, thinking that more screen time is going to make you profitable, because it's not. That's the biggest lie beginners believe. More trades, more entries, more opportunities. No, that is exactly what's keeping you stuck. It's hurting you. You need to stop doing that right now. You wait for confirmation, you wait for your system, your alerts to tell you the market is aligned in your favor. That's when you start looking for trades, not before. And if that never happens, then you don't take a trade that day. It's simple. Because the market is not always in your favor. And we only trade when it is. TradeShield is built for this. It removes the guesswork. It removes the emotion. It does the heavy lifting for you. It's telling you when it's okay to look for trades, and just as importantly, when it's not. So use it. Stop trying to take everything you see, because that's exactly why you're losing. And the moment you fix that is the moment things start to change.